So what's happening in the markets this week, Ben?
Well, the talk of the markets over the past week has been the Ever Given container ship, which had been stuck in the Suez Canal since the 23rd of March. The blockage has now been cleared, however hundreds of cargo ships are still banked up in the Mediterranean and the Red Sea. About 12% of global trade passes through the canal, and the disruption amounted to approximately $9 billion each day. Shipping companies had been weighing the decision of whether to wait for the blockage to be removed or to send their ships the long way round past the Cape of Good Hope at the southern tip of Africa. That route would add 7 to 10 days to the journey and about $300,000 worth of fuel costs. The Suez blockage came at a bad time since global supply chains are only just starting to recover from the COVID-19 disruptions. The impediment to the flow of goods into Europe risks further spikes in cost-push inflation as supply of products is forcibly tightened. Producer price inflation for the Eurozone in the month of December was running at its highest level since June 2019. And regular viewers would be aware that we have pointed out fears in the market of an inflation spike later this year as economies reopen and unprecedented government spending washes through the economy. So what does this mean for producers? Depending on where you are, increased shipping costs and uncertainty around delivery times may mean that traders are less willing to pay high prices for the commodities that they are buying, despite charging a premium to deliver these products in Europe. This could mean that many producers themselves may see a softening in prices for their products in the short term. Coffee is particularly affected, as are crude oil and natural gas cargoes. US personal incomes data for the month of February was released late last Friday. The data showed a decline of 7.2% for the month, which is the biggest on record. The sharp decline is primarily due to stimulus checks being mailed to households the month before, and we expect a bumper figure in March as another round of stimulus checks are sent out. Personal spending data was 1% lower for the month, with the graph demonstrating the short-term sugar hit effect of stimulus checks on household consumption. The Biden administration will be grappling with how to create a more sustainable consumer-led recovery over the course of the year. This is relevant for Australia because, as the old economic aphorism goes, when the US sneezes, Australia catches a cold. The Aussie dollar finished the week stronger at 76.40. Brent crude is dealing at $64.40 a barrel, and December 2021 Chicago wheat futures are dealing at just over 290 Aussie dollars per tonne. And that's finance.